The Nigerian National Petroleum Corporation, (Nnpc), yesterday officially released its audited financial statement, AFS, for the year 2020. President Muhammadu Buhari last month announced a profit after tax of 287 billion naira for the Nnpc for the financial year ended 2020, and had directed the corporation to ensure prompt publication of its AFS in line with the requirements of the law. The latest financial report of the National Oil Company showed that aside the already announced PAT from a loss position of 1.7 billion in 2019 to 287 billion in 2020, Nnpc's total current assets increased by 18.7% compared with that of 2019, while its total current liabilities increased by 11.4% within the same period. In addition, the group's working capital remained below the line at 4.56 trillion in 2020 as against 4.44 trillion in 2019, while the corporation's group revenue for 2020 financial year stood at 3.718 trillion as against 4.634 trillion in 2019. The corporation first published its AFS last year, the first being for 2018 and the second dealing with its activities for 2019. So for more on the audited financial statement of the Nnpc, Arise business analyst BODE OSOSANMI joins us now from London. First, let's discuss the published accounts. What are your initial thoughts on this, buddy? Good morning and good to see you again.
Yeah, good morning. And I think we really must congratulate the president and the minister and the management of Nnpc for breaking the jinx of opacity. By releasing audited accounts, this is the third year of releasing the audited accounts. Nnpc earns the respect of analysts and serious investors who now have something that they can really look at. But of course, like you know, publishing your account essentially exposes the cracks, allows you to fix them, so you have a meaningful financial scorecard to track your progress. So fixing your organization through a transformation should be complemented by this kind of timely and transparent financial reporting, but you know they are not essentially the same thing. But let me go to the accounts. It's first apparently not factual, based on what I could just see on the account, that Nnpc Group made profits for the first time in 43 years. That's if you look at the accounts up to 2020. 5-year financial summary shows Nnpc made about 111.6 billion restated profits in 2017. I've asked the corporate affairs group general manager to give me maybe an explanation on this. Maybe there will be something that will come up, the GGM public affairs, but it looks like that piece of headline is misinforming the public. Secondly, if you look at the analysis of how the big jump came about, it seems to have come from a category called other income, which jumped by a massive 409 billion from 2019. That's the increase that we saw from between 2019 and 2020. And if you look at the notes and details, sundry income from strategic federal government alliance amounted to 157 billion, more than double last year. We don't know what this is. Refund of 110 billion naira from federal government, which had been previously written off, I think, in 2019. What is this? What was it written off for? Why is it now back? Why is Buhari now paying this back to Nnpc? We don't know. We need to know. And then there is a one-time variation in crude stock, leading to income of 250 billion in 2020. This was nil in 2019. So what luck to suddenly find 250 billion from an inventory adjustment. So clearly, investors, analysts will normally interrogate the finance GED to give us group lead, to give us the explanation here. And I hope we will get something. But it looks like acts of largesse by the federal government and adjustments for crude inventory accounting led to a windfall. And normally investors would discount these types of things. The other thing that we saw was that there was no evidence of operational improvements in selling efficiency, because although we saw revenues and selling expenses drop by about 20%, we know that revenues also dropped by almost the same amount, mainly because of drop in oil prices. And the drop in general and admin expenses was just a mere 17 billion, only 2%. So I don't think that's the issue. The main problem I see is that Nnpc auditors have drawn attention to a material going concern problem, this negative working capital of 4.6 trillion. And obviously, a normal organization will just go under with that. But according to what they wrote, let me just read the notes. The federal government is executing mitigating procedures and giving support to Nnpc to enable the group have adequate resources to continue to exist for the foreseeable future. And they listed the things government is trying to do. What they're essentially saying is that the government treasury is guaranteeing the account. So this is like looking at government accounts, and we shouldn't be worried if we see a huge hole. Nigeria's treasury will cover it, which of course is quite disingenuous. There are so many other things. The accounts raises more questions. There's a huge credit from foreign exchange translation reserve. All this help to beef up the total equity, shareholders' equity. So my sense is Nnpc is going to need a lot of money for recapitalization. How much is this likely to be? We need to start asking ourselves. Nnpc has enjoyed all these cushions and support. How much are we talking about? And is this the best way to spend the money of Nigerians? I think the journey to an IPO is also very, very far. A lot of structural adjustment is needed. It took Saudi Aramco 3 years to get ready with much tidier accounts. For Nnpc, at least the 5-year period of focused transformation will be required with clear improvement in their key performance indicators at the very minimum before markets will begin to take them seriously.
Well, before now, everybody was waiting for the audited accounts to be published as directed by the president. And there are issues that have been raised. One of these is the qualified opinion of the auditors. What does that mean in real terms? Does it mean that the auditors were not given the free hand? And then there is also a section of that audited report that is talking about impairment reversals. Now, impairment reversals, why would the federal government of Nigeria favor only the Nnpc? Nnpc is not the only company in Nigeria to have impairment reversals. And then in notes, I think 10 and 12, there's the massive write back from the federal government to the Nnpc. So what are we really dealing with? Are we dealing with a scam, or we're dealing with creative financial engineering? What's your opinion?
Well, I don't think this is a scam. Auditors have looked at it, and like I tried to respond to the earlier question in terms of this huge hole in the balance sheet. And ordinarily, if Nnpc did not have the backing of federal government, nobody would have signed this account. That's what the auditors have said. I don't think that is a qualification per se. What that essentially says is Nnpc is a special statutory corporation doing special things and is not an organization under the Company and Allied Matters Act, for example. But if it had been, and it had presented this kind of account, it won't even be signed, talk less of, of course, like I said the last time we spoke, you can't have a company making losses for so many years and continue to exist. So Nnpc has a lot of unusual things that allow it to continue to behave this way. I wouldn't call it a scam, but I think Nigerians, this is a good start. Very important that I make that, because we never saw these numbers and all these issues before. They happen every year, and then nobody discusses them. We should ask about these reversals. We should ask more details. The group financial executive director in the finance department should be on air to tell us what exactly is happening and the details, and how much really is Nnpc costing the taxpayer. I think that's the big question. There's no evidence of any trimming down or any rationalization or any major reduction in costs. What we are seeing is a very well cushioned state-owned company. And I think it's worrisome. If you compare the return on capital employed, I did some rough calculations with that of, say, Saudi Aramco. You see that Nnpc is still struggling, even with all this support. So there are lots of questions, but you know what it used to be, Ruben. So let me just say, for now, this is a good start.
Well, we'll take a short break now, and we'll be back with more with you, Mr. OSOSANMI. Please stay with us. Welcome back to the morning show here on Arise News. We're still with Arise News business analyst, BODE OSOSANMI. Now, as you said from starting off in this conversation, we must still congratulate Nnpc on the improvements in transparency and the courage to let us know what is going on, even though we know this is just the normal industry standard. The question on many people's minds, looking at the massive working capital deficit and accumulated losses, is how should Nigerians be interpreting these numbers, seeing as Nnpc belongs to all of us?
Well, the way I'll react to that is first, clearly there's need for more detailed explanation, and we need to get much more answers, and Nigerians should ask for the answers. All the questions we've been raising at this chat should be answered by Nnpc, including the apparently deliberate error of telling us that Nnpc is making profits for the first time. Then a due diligence definitely still needs to be done. Nnpc has been talking about talking about an IPO. I think it's too early to be talking about an IPO. We really still first have to do that due diligence and understand what Nnpc Limited really means. But my broad conclusion, even after looking at the operation, Nnpc obviously can be viable, but is it ready to be? What will happen if all these cushions are all taken off? And with all the protections that it enjoys, are they worth keeping? All these are at the expense of the taxpayer. Taxpayers don't seem to understand that because of the way the fiscals work. How much are they costing the fiscal purse, and are there more cost-effective options? And do we really need an Nnpc? We just have to be honest with ourselves. But these are things that people should ask, and we should have debates and have answers on, and just not allow all these to be swept under the carpet. I wanted to talk about the capital, which I think is very important. If you look at 2019 accounts, the capital at year end was 3.6 trillion. In 2020 that we saw, the capital employed was 5.17 trillion. So you use an average of 4.4 trillion. Using profit before tax of 719 billion, you get return on assets, return on average capital employed of about 16.0%, which looks high on the face of it. But like I said, it's been cushioned by so many things. Now, all these cushions are, again, all very questionable. If you take off these huge jumps that we see, you see that ROAC is much, much lower. So is Nnpc working? Another question that we should ask, is it meeting the standards of other NOCs, and how do you make your transition? One other thing I also must add, Saudi Aramco is not like Nnpc. Many people don't understand that. Saudi Aramco used to be Aramco. That's like having Shell being taken over or bought over by Nnpc and then running from that kind of foundation. They are two completely different animals. Nnpc is something that was started from scratch. It was making losses for years and years and years, and was more like a treasury of some sort for the federal government. Of course, you know what happened with the central bank governor that questioned Nnpc's finances. So have all these things changed? Should we just now allow a black box and not ask questions? I think we should be asking much more questions from Nnpc, and we should be getting much, much more answers, especially concerning these accounts.
Well, thank you very much, Mr. AUSOSANMI, for joining us on the morning show. I wanted to ask you whether or not what has been done is in line with general accounting procedures, global standards, accounting bodies all over the world. But we seem to have run out of time, but I think that that's one of the questions we also need to raise. Thank you very much, Mr. BODE AUSOSANMI, for joining us.